probability trading strategy, you're full of crap.
If things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
Wow, you talk about something where people are basically playing with the house's money. Our guest today is going to talk a little bit about that. Hopefully, good morning, Mike.
Yeah, good morning, Dennis.
I think Christian may have frozen really quickly, but let's go ahead and he'll kick back on here shortly. So, hey, what if the strategy you're using to improve as a trader are actually the things keeping you stuck in your current performance? And that's kind of ugly. So, what if, what if you've been told, what if you've been told to do things the smart way? There we go. The sound smart way, and but are actually killing your profits. So today we're going to dive into 3 of the biggest trading myths that could be costing you money, and we're going to break them down, exposing the truth about them, and showing you exactly what to do instead. So welcome to Trading Truths. I'm Dennis Wilborn, the founder of AutoPilot Trading. With me is my co-host, Mike. Introduce yourself, please.
Hi, everybody. Mike Lamothe from Merrill Wealth.
And so, yeah, guys, and every week we break down the biggest myths in the trading world and expose the limiting beliefs that hold traders back and help you trade with more confidence and success. And today, Mike, go ahead and let us know about our guest today. I'm excited.
Yeah, thanks so much. So we've got Christian Flanders with us, a trader who achieved a 433% return in the U.S. Investing Championship just last year. Christian built his success by learning from both wins and losses, keeping his strategy simple, and mastering a very important thing called risk management. So he's here to help you break free from these common trading mistakes. So, Christian, welcome to the Trading Truths podcast. Thanks so much for being here.
Hey guys, thanks for having me.
And so, hey Christian, one thing, I've been told this is a little known fact about you, and we always like to surprise people. Okay, like I was really shocked. One of our guests actually was in a monastery for a while, being like a Buddhist monk, and now nothing that colorful, but a lot of people know about your success in trading. But one thing they might not know is that you've said losses are just as valuable as wins because of what they teach you. So as you introduce yourself and tell us a little bit about yourself, can you talk a little bit about that before we get into the actual myths? Because I think it's important for traders to know that, because I know when I first started trading many, many years ago with that dial-up modem, it was all about winning, and had a really piss poor mindset about what it meant to understand the thing of losing.
Mm-hmm. Yeah, I mean, losses are an important part of trading, because if no one lost, it wouldn't be called trading; it'd be called winning. So there can't be any reward without risk. You have to take risk. You're going to have losses, and the goal with trading is to keep the losses as small as possible. Not only as small as possible, but you don't want to be in your losing trade. You want to be in your losing trades as little as possible in terms of length, because that allows you to have the money freed up to for new potentially winning trades, and also frees up your mental headspace. At least for me, holding losers overnight or holding losers for weeks, it wears on you mentally, having to look at that on your screen. So just getting at, I prefer to get out as fast as possible when I have a losing trade. I don't want to be in it. I'd rather get stopped out in the first 30 minutes after putting the trade on. I'm actually speaking to a trader who reached out the other day who said he hated taking losers quickly. He did not like getting stopped out the same day. And my response to him was, I usually get stopped out in the first 30 minutes. Most of my trades probably stop out in the first hour after I put them on. I want to know immediately whether I'm right or wrong on the trade.
Roger that. So that's good. So if you will, tell us a little about, because you got a great story. I mean, you have a fantastic story I guess you were a professional poker player, and again went into basically took that into trading. So can you just give us
Sure.
the
Right. Yeah.
the Reader's Digest version?
Yeah. So a brief version in college. That was when I was in college. The online poker boom began. That was the first time people had access to fast enough internet where you could play poker on the internet. That combined with the new technology allowing people to see hole cards on live streamed poker tournaments in person, especially the World Series of Poker, created this huge explosion in popularity of the game. So, I mean, that was the birth of the online poker boom, and I played it in college. I did very well. I was able to pay for my senior year of school. After school, I worked at a proprietary trading firm for about a year. We traded U.S. Treasury and Treasury futures. The firm basically blew up in the 07-08 financial crisis. And I was playing poker the entire time I was there working. I get home from work and just play poker until midnight, and then wake up at 5 a.m. and trade until 5 p.m. and then just every day. So after that, I decided to try poker for a bit, and I ended up playing it professionally for almost a decade. And then at the end of the poker career, I'd always wanted to go back into trading. That was always the plan one day. And I had saved enough money where I had enough, combined, living expenses plus a portfolio to be able to support myself and my wife, because I convinced her to quit her job for me to pursue it. And also, kids, because that's what I wanted to, I want to have a bunch of kids. So it was, in hindsight, I should have probably waited for a few years of experience and profitability, but I went all in from the beginning. Yeah,
did I hear you?
Would not recommend that. Would not recommend that.
Yeah. Did I hear you correctly when you said that you convinced your wife to quit work so you could play poker?
So I could trade for a living. Yes.
Oh, so you could trade for a living. Okay.
With basically no experience. I mean, I had traded for 1 year at the end of the, for 2017, I traded for 1 year. I think I was up 50%. And I told my wife, worst case scenario, I'll be up, 15%. I'm pretty confident expecting triple digit returns from here on out, because I made so many mistakes that year. If I just fix those, and I don't know if you remember 2017, but that was a very, very forgiving market. I mean, I think the largest pullback in the S&P was 3% that year. So you bought it, it went up. It's very, very generous market. And sadly, not all markets are like that. That's the exception, not the norm. So 2018 was a rude awakening for a little volatility and some chop.
Mm-hmm.
Yep. And so,
wow, so, that's a tremendous amount of belief, love, and especially trust on her part.
Yes, yeah, she went through a lot because poker was a roller coaster ride of emotions. Because you're winning and losing a ton of money every day. But she had a job, she had a stable income. So how are you doing, honey? Oh, I lost a ton today. Oh, I won a ton today. It didn't really affect her. But now she's not working, she's not bringing in any money. She's taking care of the baby. How'd it go today? Oh, I got hammered. Oh, I lost. It's like it was very difficult for her to deal with the with the swings. For myself, not as bad. I've been doing poker for 9 years, so I was used to it. But for her, it was very, very challenging.
If you don't mind, and if you say it, let's not talk about it. Then that's perfectly acceptable. But a question that comes to me is, so you're managing your emotions, but you also have to manage your her emotions. And how did you go about doing that part of it? Well, what was that like?
I have a lot of self-belief, obviously, and I was very confident that eventually it would all click. And I think that she could feel that, that I was like, I'm going to figure this out. I'm going to make it work. Poker is not easy. If you can figure that out, you can find a way to make trading work. So, but no, we had a lot of conversations about how I was going to make it work and figure it out. And it was tough, but I had, such strong belief that she was able to stick with it. But it was tough. It was very challenging, for sure.
Yeah, that's incredible. So your level of conviction in what you're doing, how you're doing it, why you're doing it, that's what gave her the confidence in you, and for you to allow her to be led by you.
Yes. Yeah. Yes. A ton of self-belief. Yeah.
Yeah, that's absolutely awesome. Because my wife and I, we coach. We're basically marriage mentors. We've been married like 50 years, almost 51 years in
Wow.
this coming April, right? And so we've coached over, gosh, I want to say 350 couples, and to basically continue to strengthen their marriages and all that kind of stuff. And I tell you this story just really briefly because what the biggest struggle is with so many marriages is communications. And it sounded like you guys had a really solid and would take time to communicate specifically, to basically, kind of cover that.
Yeah.
Or maybe that was just a learned skill.
She was very patient. The communication, she definitely communicated with me, maybe not in the most gentle way at times, but I mean, she made sure I knew how she was feeling about it. I'll put it that way. Because
Okay.
going on, year 4, year 5, year 6, it's like, I've made money, but it's like if you had just bought the S&P, you would be up so much more. Like, what's going on? And it's like, well, honey, like, once it really clicks, it's going to be worth it. I mean, it took Mark Minervini, one of the greatest traders, in the last, 30 years. It took him 7 years.
Yeah.
So it takes time. The experience is so key. I can't stress that enough. It really does take time.
And so, okay. Well, before we get into the miss, Mike, I have a couple of questions for Christian that I think are that tie into this. Is that, what habits and traits did you develop as a professional poker player that were transferable to life as when you started trading for a living?
Okay. The big thing with poker is that when you play online, so I was usually playing 10 to 16 tables simultaneously, and most of the games were 6-handed. So you play against 5 other players. So out of those 5 players, it's usually 4 would be other professionals and 1 would be a really passionate amateur. Okay. So, but poker's a negative sum game. So the house is taking a very large fee. They call it the rake. They're raking every hand. So you have to not only be better than your opponents, you have to win enough to overcome the rake. So if you're not the best or second best player at the table, you're going to struggle to win. So, and because of that, the weaker professionals are constantly getting weeded out. So only the better ones remain.
Yeah.
So it's like, it's incredibly competitive. And also all the best pros are playing 12 tables, right? The weaker ones might only play 6 or 4 or 2, but the best ones are literally everywhere. So you're constantly battling the same guys over and over. So the only way to stay ahead is you have to do a ton of work off the table to find out what's going on. So I had software called, it's called Hold Manager or Poker Tracker. There's a lot of different software, but it tracks every hand you play and every hand your opponent plays. And it allows you to see, what they're doing. It allows you to slice and dice the data up to see what they're doing, what you're doing, how you differ, in a lot of different ways. So you have to spend so much time off the table to keep an edge against the other players. So that's what really carried over to trading, was putting in the time, when the market's closed. You have to. It's the only way to stay ahead, because the market, it's just as competitive, if not more competitive than poker, because with trading, there's the potential for unlimited wealth. Yeah. There is no limit to how much money you can make. With poker, you can only win whatever the other players are willing to put on the table. With the market, it's unlimited.
Wow. And so it sounds like, is that, and correct me if I'm wrong, it sounds like because of the routine and the evaluation, what we call review and reflection, that you learn in playing poker is what basically propelled you and helped you to become a better trader. That review,
of course.
Yeah.
The other thing that poker really helped me with was that when I started poker, I was fairly risk averse, but poker trains you. Whenever you have an edge in poker, you have to be like hyper aggressive. You have to maximize your edge at every possible opportunity.
Right.
So that taught me to be, very aggressive. So that carried over to trading, where if I think I have an advantage, if I get my A+ setup, I'll go for it with size. That's something that, that's how you're a boom and bust trader.
Yeah.
When you see the opportunity, you go for it. But unfortunately, it took me a long time to know when to take the foot off the gas.
Right on. So, and so, Mike, you want to get in? Should we get into the myths that we want to debunk today?
Yes. Let's get into it. So the myth number 1 is learning by trading alone. Beginners think they can improve without tracking and reviewing their trades. So kind of sounds like we all need to track and review our trades if we hope to improve at all. So what do you think?
Oh, for me?
Yeah.
Oh yeah. Absolutely. I mean, there's just no way you can win at this game if you're not doing a ton of work reviewing your trades. It's just not possible. You want to put up the quote I have in the
yeah.
I can do that.
Sure, great. Thank you.
There it is.
Yeah, right. So I will say that when I started trading during the losing streaks that I would have, I didn't want to update my trades. I didn't want to journal. I didn't want to do anything because it would be too painful to look at. You've been, you got your wife to quit her job. You moved to an island to do this and you're losing. And it was, very, very tough mentally and emotionally to accept that. But the only way to win is you have to go through it. And, I have a friend that I've been mentoring for a while, and it's taken him years to record his trades. And he did every excuse in the book. Oh, well, my broker has the trades. Oh, well, I trade off feel. It's not going to make a difference. It doesn't matter. I remember everything. And then, of course, that's absurd. It's impossible to remember everything that's happening. So I have what he said. You can quote me on this. He didn't want to see his mistakes staring at him every day if he recorded them.
That's right.
You didn't want to see, and I understand because I felt the same way. It's brutal seeing the mistakes you made staring at you in the face. You don't want to see that, but it's necessary. I mean, it's the only way to improve yourself is you have to fix the mistakes. I work with a few other traders where I'm in a group with some other traders, and one of the guys, I told them, look, if you really want to improve, go back and tweak your exit. See what happens if you use a different exit. Use the 10-day trailing stop. Use a 20. And one of them made a comment in the group video chat, like, "Wow, I would have been up 25% if I just used the 10-day as my trailing stop last year, changing nothing else. Just do just that."
Oh yeah.
Right. And it's okay, well, there you go. No, now, and if you remove a few other mistakes and a few more, before you know it, now you're plus 40, plus 50, plus 70%. Just from a few tweaks, like you're closer than you think. You know. And another thing I want to add, just anecdotally, I attended Minervini's Master Trader program, which is excellent. I highly recommend going for it if you're really passionate about trading. But at the start of his Master Trader program, he asked everyone in the audience, raise your hand if you record all your trades, your average win, average loss, and win percentage, right? And there's probably a little over 100 people there. Only 10 guys raised their hands.
Yeah.
Okay. About 10%. So, and these are passionate trade. I mean, they're willing to spend a weekend, spend a lot of money to go there to learn. So these are some of the most passionate, amateurs you're going to find, and only 10% recorded their trades.
Well, go ahead, Rich. Christian, my mind's sitting there twisting around because I've been at this game a long time.
So the point I'm making is that if you want to win and win big at trading, the top the average trader doesn't win. The average trader underperforms or loses. Okay.
Sure.
If you want to win, you probably have to be in the top 10%, maybe. But if you want to win big, you need to be in the top 1%, top 0.5, top 0.1%. Okay.
Right.
So the only way to do that is you have to do the things that the other traders are unable or unwilling to do.
Yes. Yeah. So yeah, I find that very interesting because, as you said, you had a bunch of motivated traders there. You knew they were motivated. However,
Unable,
the
unwilling.
90% of them were still in the wannabe stage because they hadn't transitioned into that. I am going to be a master trader. I am a master trader, and I'm doing the things that master traders do. Because just going to a school or a class doesn't make a person a master trader. And because a lot of traders believe that just putting in screen time will make them better. But the truth is, if you're not reviewing your trades, you're just repeating the same mistakes over and over again. And it shocked me when I started, doing those kind of valuations for my own trades. I would have, like, out of a year's worth of trading, I would have a handful of trades that, let's say I missed my stop loss and I didn't keep my tight, 5% stop loss. And those 3, 4, 5 trades that, got wiped out wrecked my year. And so I had to, I mean, they just wrecked the year, but it was just making that one small change that, turned me from losing to consistently profitable for like 13 years.
Yeah.
And still going. So I love the quote. Mike, what do you think? I love this quote because that the degree to which a person can grow is directly proportional to the amount of truth he can accept about himself without running away. I mean, that is one powerful, and it's rich. And I'm gonna grab and steal this from you and use that for a mantra for us. And because my other one is about excuses, because you were talking to a trader. It sounded like he was making a lot of excuses.
A lot.
And I kind of have a philosophy of Jocko: all excuses are lies. And so can I go back to, okay, can I take the quote down?
Yeah.
Okay,
Yeah.
Cool. So Mike, let's go.
Yeah, Christian, you had mentioned there's something interesting in there when you said unable or unwilling. Well, I'm curious to hear what you think might fit into each category. What would be something that somebody might be unable to do versus them being unwilling to do? How would you differentiate?
They kind of go hand in hand. I mean, some trade. I mean, so I'll use my friend as an example. He loves it when I use it as an example. He was, unable. I mean, he was able, but I guess he chose not to. So he was unwilling. He was unwilling. I mean, I guess unwilling to do would probably be more accurate. But yeah, I mean, a lot of traders they're unwilling to do things that need to be done if you want to be ahead of the crowd. And
Right.
Again, it's so competitive. Only the top few percent of traders will win. So if you can't set yourself apart from the crowd, I mean, forget it. There's no chance you can attain big numbers consistently.
Interesting. So how does somebody convert from being someone that's unwilling to someone who is willing?
You have to make a choice. That's it. You have to choose to win. Winning is a choice.
Wow. So that, okay, now you got me thinking again. Okay, what's your definition of winning? Because they're from when it comes to trading, because a lot of people think that winning is basically constantly making money. But what's your definition of winning?
So yeah. So this is obviously everyone has a different definition. For myself, I want to outperform the major indexes over a long time frame. So 5, 10, 15 years. So I think maybe it was before, but the call started. We were chatting before the video was on, but it took me 7 years to achieve that big return. And for the first 6 years, I was profitable, but I underperformed the indexes by a long shot. I mean, maybe in 6 years I was up 50%. The numbers were not very good. But then that one big year, well, now my returns double the NASDAQ, right? And hopefully that continues going forward. So for me, winning is outperforming the indexes by a lot over the long run. Everyone has a different definition of it, but it doesn't mean winning every day or even every month. I mean, last year I think half my months were positive, half my months I lost.
Yeah.
So it's really, taking a long-term view of winning. I mean, because this whole process is very long-term. I mean, if you can win, at a high rate and compound, I mean, the magic is really in the compounding. If you can do this and win for 5, 10, 15, 20, 25 years, get a compounding calculator and plug the numbers in, and you'll be amazed at what's achievable.
Yeah.
Interesting. So if somebody's trading for a living, well, what do they need to be able to do? Right? Because they're not winning every single day. So
right.
How are they keeping the lights on?
Right. Well, if you want to consider trading for a living, you need I would say minimum 2 years of living expenses saved already, and a portfolio large enough where you could have 2 years of whatever your largest drawdown is ever, like double it, and you would still be okay at the end of it. You have to assume worst case scenario. At least that's for me. Because when I switched to poker and then trading, there was no career I could fall back on. Like a lot of the guys I spoke to at the Minervini Gala and his birthday party, a lot of them wanted to go pro or wanted to trade full time or trade for a living.
Right.
But they have that cushion, like they can go back to a career if worse comes to worse, right? But I really didn't have that safety net, so I was all in on trading.
Cool. So yeah, one of the things, Christian, you basically said that your definition of winning is to beat the S&P or not beat the NASDAQ by double digits, and that's great because I think that's something, but that incorporates a complete body of work for the year, right? That's your body of work, the wins, the losses, the whole 9 yards. Do you break down your winning steps though to like on a weekly basis where what defines your wins for the week? Is it attached to the outcome, or are you more focused on the process?
More focused on the process, of course. I mean, it's all process. I mean, if you're focused on the money, you're going to make mistakes. You have to focus on executing your plan. I mean, that's everything. That's everything. So, did I make any mistakes? Why did I make them? And the mistakes could be, taking a trade you that was outside of the scope of your plan. It could be not sizing large enough, sizing too small. I mean, there's 1,000 different mistakes you can make. There's so many mistakes in trading. So, the process is, making as few mistakes as possible because we're human. We're going to make mistakes. That's inevitable. You just want to make as few mistakes as possible, stick with the process, and the results will come. And I spoke with a guy at the Gala. He had a great quote that, what was it? Your P&L is a lagging indicator. Okay. You will improve as a trader before the P&L kicks in.
Right on.
It lags, and it can lag for a while, but yeah, it's definitely a lagging indicator.
Yeah, mine lag.
That's such a great point because people will use their P&L as a yardstick, whereas they should be using their process as the yardstick. And that being did I make a mistake? Well, I'm on process. Yeah. Did I make a mistake? Oh, well, this trade lost. And that's where I think a lot of people tend to.
I mean, I've spoken to traders that, they're ready to give up on the system after they have, 3 losing trades in a row. Last year I had 27 losing trades in a row.
Yeah.
Like that's that's the game. When you have a low win rate, which I do, my win percentage is around 30. So you're going to have very long stretches where you lose, and you lose a lot. And that's part of the game.
Christian, it sounds like we had a very similar year last year. And but
how do you maintain your conviction after 27 losses in a row?
Oh, well, you size down. You size down. I mean, if you do enough homework, if you study the market, you know how stocks move, and you know that eventually you'll get the opportunity again. It's just a matter of time. So I don't take the losses personally. I think a lot of guys take the losses personally. Like I lost, I'm a loser. I don't think of it like that. I think of it just the trade didn't work.
Yeah. Mm-hmm. Yeah. Well, I mean, and I look at it as a business. It's the cost of admission. I mean, it's basically, not every, like when I was in retail a long time ago before, I did all the other stuff in life, not all of the things you put on the shelf are going to be winning pieces of clothing or whatever. Some of them you're going to have to discount it, and some of you have to give it away to the Salvation Army, and then that's the ultimate stop loss. But Hey, traders fear losing small gains, so they exit too early. So this is one of the biggest mental roadblocks that traders face. And you see a little profit, you grab it before it disappears. But over time, why is this habit, going to impact traders so much? So, Christian, was there a time when you struggled with this, and then how did you get over it? How did you change your mindset to stop taking
Right.
those small gains?
Right. So that this is something that you have to see for yourself. So this is why it's so important to record your trades, because if you can go back and look at your trades and change the exits, you copy paste your spreadsheet into a new one, and then you change your exit. What if I used the 10-day as my trailing stop, a close below the 10? What if I used the 20? What if I used the 50? And you go back and you see for yourself what would have been different if you let your winners run instead of cutting them off too soon. And I found that my profit would have tripled, or the profits would have been substantially higher. Even last year, which was a great year, plus 400%. If I had let my winners run longer, I would have been up 800%.
Wow.
Or even 1,200% if I used a longer term moving average. So it's this is why it's so important to record your trades, so you can see for yourself. You have to go back and see what happens if you let your winners run and use a longer term trailing stop.
Yeah, it's almost impossible to do if you're not actively tracking your trades. That's why, in my book, the Trading Mind Wheel, one of the I look at journaling as a skill, right? And if you don't have a good way to track your trades, how are you going to be able to go back and figure any of that stuff out?
Right.
Yeah. It's the hard work. Again, it gets back to part of the process. It's the process. I think James Clear in his book Atomic Habits talks specifically about that the lowest level of achievement is to focus on results. But then the people who really, really, really get to master a skill, a trade, or whatever, they basically focus on the process, but then also let the process shape the results, but also the process shape who they become, their identity. And so Bill Clinton has a question. Well, Bill, go ahead and ask the question, buddy.
Oh, we're getting all types in here.
And no, we don't know where Hillary is. So go ahead, Bill. He has a question. Well, so we'll stand by and wait for him. So basically, back on this is, how do you handle the emotional pressure of staying in a winning trade? Kind of like, what's your baseline for your, because I think I'm sure you have a standard set of back-tested and forward-tested rules that you kind of stick with, and then you may make slight modifications to them based on market conditions. So, what's your level of pain where you have to get out of a trade for sure? Where do you say, okay, that's my line in the sand?
Oh, so the stop, I usually just use the low of the day as my stop. When I enter, I just use the low of the day. I try to keep it really simple. In terms of letting winners run, you mentioned the emotional pressure. That's the hard part. The hardest part of trading for me is you have a big winning trade and you let it run in your favor. And you can imagine how amplified that is when you're trading for a living. You have a wife that is not happy with how it's going so far, and you have to pay all the bills, and you have all of your money in your trading account. It's a ton of pressure, and that's the hardest part is letting the winners run. And I've been fortunate to speak with a lot of traders that I've met since the result and at the gala on Twitter, and that's a recurring thing, that traders they do not let their winners run. And I struggle with it too. I mean, I'd like to say I follow my rules like a robot, but I do not. If you're trading, get that kind of return, you have to use a lot of leverage. I mean, there's no way to get that kind of return without leverage. So when trades start pulling back, they all pull back simultaneously. So you feel a ton of pressure on your portfolio when you're levered and everything pulls back. So no, the emotional pressure is intense. So yeah, that's the hardest part of trading. As human beings, we do not want to see that profit get away.
Yeah. And so,
do you think that community has anything to do with your ability or increase, decrease, or about the same for your ability to remain disciplined?
I don't follow.
So the people around you, your community, if you're a part of a community, if you have other people around you, does that contribute to your ability to be disciplined and stick to your rules and your process, or does that not really matter so much?
When you say community, do you mean family? Do you mean other traders?
Oh, interesting. I think that it could be both, right? Like the people that you're surrounded is your excellent point, right? So people around you, so family might be one that's in your ear that's saying, well, we've got to pay the bills. Well, what's going on? The refrigerator's a little empty. Got to sell that trade. So so that could be something that pulls us away from sticking to our rules. Or it might be if we're in a strong community of traders, in person, online, wherever, and we're seeing that they're either following their rules or cowboying it up and doing whatever, that might cause us to deviate. I'm just curious to get your thoughts on any of that.
So I will say that last year, the breakthrough for me was controlling my drawdowns last year, and definitely entering the contest and knowing that everyone was going to see I wanted to make sure that I posted my results every month so people could see the natural fluctuations in the returns. And I did not want to have a month where it's like, because there's so many guys in the competition, they're up, 300% in the first 2 months. And then like they vanish. You're like, well, where did they go? It's like, I know what happened. I know they blew up, obviously, right? I did not want to blow up. I did not want to have a massive drawdown. I wanted to be very consistent. So, in that sense, the community definitely helped. I felt to me like everyone was, watching me trade over my shoulder. So I really wanted to keep the drawdown small. But look, I like to say I follow my rules all the time. I don't. The emotional pressure of the swings, the profit volatility, it affects you, and I find myself breaking the rules sometimes, and that's something that I struggle with. Holding on to the winners is very, very difficult. That's the hardest part.
That's the hardest rule. Holy
so as far as holding on to your winners and all that kind of stuff, do you basically, what steps do you take to be able to do that? Such as, okay, like I know people, and even the process I use, I'll put in, hard conditional orders for either stop loss or trailing stops and all that kind of stuff, so that I make the decision outside of market hours where there's no emotions.
That's great.
And then just plug them in, and then basically go about my business, so I'm not watching the market on a daily basis.
That's great. That's one way to do it. That's a great way to do it. I watch the market, so that definitely has a the friend I mentor, I tell him, once you put your order in, you get filled, you put your stop in, like walk away, just walk away, because nothing good's going to happen. There's nothing more to do. You have your stop in place, and just let the trade work. When you have a lot of positions and size on, it's difficult to do that.
Yeah.
If you're levered 2.5 to 1 with all of your money, it's very hard to step away and not watch that. I'll just say that.
Okay. No, that's fair. That makes a lot of sense. I know when I used to, I started off, kind of doing the day trading and all that kind of stuff. And so it hooked me. Well, actually, there's also this kind of belief, I think, that new traders have, is that they have to watch the market all the time. And when I went back and reevaluated my my reasons for doing that, is because I really had convinced myself that if I watched it all the time, I was going to be able to influence what the market was going to do, and which is absolutely, idiotic. That was a crazy belief. But that was my belief that because I'm a really brilliant, smart guy, a lot of accomplishments and all that kind of stuff in life, and and I'd say, oh, of course I know what's going to happen here and all that kind of stuff, and oh my gosh, that ripped me so badly on blew up two accounts. My wife was not happy losing six figures. She was, but it happened. But now, I that's not even on the table anymore. And so I've adjusted the way I trade in order to basically combat my weaknesses. And so, what adjustments do you make in your trading that allows you to combat your weaknesses, Christian?
Right. So the key for me is I have to sell some of my positions into strength. Otherwise, the profit volatility is too much. So I will trim into strength to try to reduce the odds of me making an emotional decision when the dollar amount gets too large. I was talking with Michael before we started recording about a trade I had. I don't know if we can pull it up, but LUNR. I can tell you the date. I don't know if you can.
Hold on.
Yeah.
Benson's about to work his magic.
LUNR.
Lunar.
There we go. Okay, hold on just a second. You guys continue talking.
That one really.
It will be up here shortly.
Well, I just want to show the viewers so they can see, the kind of emotional swings, when you're watching the market.
What time frame chart do you need?
Daily. Go daily.
Okay, there you go. Let's go. Go daily. Come on. Open. There we go. Maximize.
Okay, so if you zoom back, you can see on November 7th. That day. Yes, I entered on that day at around $8.50.
Yep.
And it had a very strong rally. I sold half in 4 days on November 13th, the day before that. And then on the next day, on the 14th, it gapped up on earnings. Okay.
Right.
And I want to say, let me see how many shares I had. I had a lot of shares, I believe. Where is it?
So you were in here, out here. So you made about, it looks like you made somewhere between probably 23% all the way up to, if you got out closer to the high, you were up almost 40%.
Oh, I did not get out close to the high. I got out at the dead low of that day.
Of that day right there. Okay, so 18%, 18 to 19%.
Right, but so the difficulty with holding is, I believe that stock. I think most of my positions that day were selling off, and Lunar was down. So because it just looks like that one bar. I'm looking on my screen right now. That was a 35% swing from high to low.
Yep.
Okay, so. I had a large position on, so I think I probably had 50,000 shares. So if you look at that, that's like a $250,000 swing in a day that you're seeing that open profit vanish. Okay, it's just slowly ticking down all day, and that's combined with your other positions also moving against you. So it's that can cause you to make poor decisions. And I exited at the dead low when I couldn't take the pain of the loss anymore, and that was not part of my rules. That I told a story about this, but basically the exit was on close below the 10-day. It did not close below the 10-day. It touched the 10-day, and I said, you know what? It's just going to close below the 10, and it didn't, and it snapped back the next day.
Yep.
But
and then really nice run.
And then it had a nice bounce up from there, right? But if you back test it, right? So in my back test, let's say you use the 50 days your stop, right?
Right.
Which
for me on this chart, that's the yellow line.
Right. You'd still be in it. So it'd be more than a double.
Yeah.
Right. But with a name this volatile, you're going to go through 40%, 35% drops in a day, right? From peak to trough. So that's why, in theory, I mean, yes, you should use the 50-day, or I should use the 50-day at the start of bull markets as my trailing stop. But in reality, it's not quite a smooth sailing ride. But if you were to just look at the spreadsheet at the end of the year and you use the 50-day, you say, oh, what a great trade. You bought at 850, you sold it at 19. Piece of cake. But reality is a little different. Having to actually live through the trade, because when that stock's dropping like that, everything else you have is dropping. So you're probably experiencing a rather large because I'm trading quite aggressively, so I'm experiencing a large loss in my portfolio. So
I mean,
do you remember how many other trades he had on that day?
Say again.
Do you remember how many other trades he had on that day?
Yeah, let me see.
Like a rough guesstimate.
8.
So 8.
Is that on the high end, or is that kind of average for you?
That's high. I believe I was like fully leveraged on that day.
And so basically you were at 2.5% leverage on this, approximately.
My portfolio was probably 2 to 1, I would guess, approximately.
Okay. So I get it. I mean, if I saw a big red candle like that, like you said, I mean, you had been up huge on the gap up, but then by the end of the day, your pucker factor must have been pretty extreme.
Pucker factor? I don't know if I've heard that one, Dennis. Well,
yeah, that's another one too, but I like that.
Christian, you probably don't know what I used to do for a living. I used to fly jets for the Navy a long time ago.
Wow. Okay. Ooh.
And so when I talk about pucker factor, it's basically when you're really, really close to an accident or that kind of thing, and it means exactly what it means.
Yeah. Oh yeah.
And so
I had that feeling in the car where you're like, you kind of narrowly, but on a jet, it's like, oh, that's that's game over if you crash a jet.
Especially because we would go on missions and we'd be 420 knots at 200 feet, and so and that was just in making 6G turns and back and forth with with your wingmen and all that kind of stuff, and so.
Yeah. Did you watch the new Top Gun? Because the in the cockpit views were just incredible.
Oh yeah. No, I love the movie. I don't know which is best, the original Top Gun, or I think we should have a poll. Which is the best, the original or the latest version? I think they did a really darn good job of showing the F-18 and its abilities. Mm-hmm. But that's and so that's really funny. Is the attitude I brought across from, flying jets for a living and living on the edge. Unfortunately, I inserted that into how I started trading. And, anyway. Hey, we got a couple of questions here before we get to the last thing. And so does Christian do any meditation, yoga, or exercises to handle all this pressure?
Yes, I love playing tennis. I play as much as I can.
Okay. And then, does that say the question had to do with stop losses? Do you use long-term MAs? It sounds, and if so, what percentage do you use
for a trailing stop or a initial stop?
I think I think it was regarding. Or maybe it's just a longer term, but I thought it was in regard to the trailing stop.
Yeah, I know, Alberto. So part of it would, I think you've answered part of it with the different moving averages, the 10, the 20, the 50, percentage R. So what would be, how much give back would you allow?
Okay.
Meaning that, right? Like, so you're up 100%. Would you allow it to come back to, I don't know, a 40% drop, 50% drop before it hits the...
Right. Yeah. So that's actually something I have not. Right. So usually, most of the time, the 10 days is going to be pretty close to the price of the stock. There are extremely rare circumstances. So you can pull up CRNC if you could do that, Dennis. So I can show a trade that I took, which I actually I wish I sorry, what was his name? Alejandro?
Alberto.
I wish Alberto had asked me this question 4 months ago, because I made a mistake here, because it's such a rare situation, Alberto. But if you look at CRNC, this had an episodic pivot on January 3rd. If you
all right, we're getting there, guys. Hang on. Let's do this one. Okay.
So I purchased CRNC on that episodic pivot at $10.80 a share, and it went from that to, it touched 27 the next day, and I sold half of it at around 23, but I didn't. I got greedy, and I was like, wow, look at this, look at the power from this breakout. I'm going to hold this for a bigger move with the other half, rather than thinking, that's the kind of move, you're lucky to get, in a year, let alone, in a day. I should have sold a lot more. I should have sold all of it into strength. But no, I don't have I never thought about it, because it's such a rare thing where you're up enough, where you're up, that much in a day or two, where you actually have to worry about like the 10 days, like 70% lower, right? I mean, that's just so rare. So I never thought about that, but that is something that I would have in place now. I haven't, thought about the rule, but yeah, if I get a name that's, the 10 days, 50, 60, 70% above the price is, that extended from the 10 day, I will sell more of the position. Instead of only selling half, I should sell 80, 90%.
So you basically got in at about $10.60?
$10.80, yeah.
Okay, about there. And at the high, you were up, well, holy moly. I show you're up, it was up about over 150%.
Yeah. So I should have sold everything, or 99% of it into that move.
And then you basically get your pullback. Now I use the 8-day moving average, not the 10. But at the high, you're about 63% above the 8-day. So I would assume at that time probably 55+% above the 10.
Yeah. So I ended up using the trailing 10 or 8, or which it doesn't really matter which one you can use either, but I think I used the 10 day. So when it closed below the 10 day, I actually, closed below the 10 day, I exited the rest of it. But if I had used the 20 day, I would have exited. But if I used the 50 day, I would still be in the trade right now, which is kind of crazy. But holding through that profit volatility is I think we lost Michael.
No, he's there. Mike, where are you at?
No, you got to put me back in.
Well, darn, where did you go? Hold on.
There you go.
Okay.
Now let me see why I lost you in the first place. Let's go back over here. Yeah, you're there now. Okay, there you go. So, can I share one of the little hacks that I've found to get around that issue, Christian?
Please do. Let me write this down.
Since I'm the OG here,
Yeah.
It is the way I basically pull on a trade like this. Yeah, I want to. I would be out at. I take a little bit of profit at 10%, 20+%. But then on the rest of it, I put it, like I'll carry about 20% of my shares into, longer term, but I link that back either to the 8-week moving average, which corresponds, or 8 or 10-week moving average, which corresponds with the 50. And I'll just shift to the weekly chart to then trail my stop.
Okay.
And that tends to work really well. And it at least keeps me in a part of the trade, part of the position, to let it go on up. And then the other thing I click in as part of my rules are, if I get a pullback, like you see this nice, beautiful pullback here on CRNC, well, I get another trigger to buy right here, like 2 days ago at $13.
Yeah.
And I hop right back in. To basically fill myself up with another full position. But the rule is, I'll shift, I'll hold, I'll sell 80%, hold the 20, but link it back to a trailing stop based off a longer term chart. And it tends to work out for us very well.
Yeah. No, I mean, that's something that I need to work on. The whole holding for bigger gains would improve my results for sure.
Yeah. So cool. So where are we at,
all
Mike?
have something to learn. This coming from somebody, Christian, that's up 400% last year. We all have something that we could all continue to improve.
Oh, you betcha. You betcha. So, okay, let's see. I want to jump on really quickly. Sizing up after a loss will help you make your money back faster. Now, this myth, so what's the essence of this particular myth and why people believe it and how it can lead them down the wrong path there, Christian?
Right. So this is the famous martingale betting strategy. And if you're not familiar with that, that is often used in casinos when playing, I believe, roulette or blackjack, where whenever you lose a bet, you double your next one to try to make back your original bet plus the profit. It does not work in casinos. Eventually, you will lose enough times in a row and you will lose all of your money. In trading, you really want to employ an anti-martingale betting strategy where when you lose, you bet smaller, and when you win, you bet more. And that will always keep you trading your largest when you're winning and trading your smallest when you're losing.
Cool. So can you give us an example, maybe a recent trade that you did where you actually did that specific, or basically you're having...
Right.
Go ahead.
So CRNC, I believe in January, let me see my statistics because I have it all written in my trading journal. One second. So in January, I had 3 winning trades and 25 losing trades. So I started cutting size when I started losing. And even with those, I mean, obviously CRNC was a huge winning trade, but I was still profitable for January.
Okay, cool.
Even with a 11% win rate, because I dramatically cut size once I started losing. So that's an example. If I had increased my size, I could have very easily been down a lot. I mean, in the past, before I got the risk under control, I know myself. I know I would easily have been down 10 to 15% that month. And looking back, just be like, how is this possible? You had one of the best trades you've ever put on, and yet you're down. What are you doing? This shouldn't be possible. So, but no, the reducing bet sizing kept me afloat. Right
on. So, Michael, you look like you have a question. Smile.
No, that I do the same thing. Well, when I'm winning, I'll increase my trade size. When I'm losing, I'll keep cutting smaller and smaller until things turn around. And I was just going to ask for your take. Well, why do you think that works? Why do you think that anti-martingale strategy works? This
also goes back to poker, where in poker we call it tilt, and trading, it's like revenge trading. All the mistakes in trading, there's different words for it, but it's basically tilt. You're emotionally off balance due to the losses. There's an emotional reaction. So in poker, if you start losing, you're not playing your A game, right? If you've been losing for 6 hours, you're just getting beaten up nonstop. You get it in the head, you lose. You get it in behind, you lose. You get it in as a flip, you lose. You just lose. You can't do anything right. You're not playing your A game. You're not playing your B game. You'd be lucky to be playing your C game at that point, right? So, in poker, you have to quit. You have to stop playing. And that is one of the hardest things as a poker player, is to quit when you're losing, because no one wants to leave the table a loser. And that took me, I want to say 6 years to be able to quit. It took me 6 years. I would play 20 hours in a row trying to get unstuck, trying to make the money back. And that is, you're not playing, you're not playing very well at that point, right? If you're 16 hours in, you're a shadow of your A game. And with trading, it's the exact same way. If you take 5, 10, 15 losers in a row, or take some big losses, you're going to be emotional. I mean, that's totally normal. That's human. So the chances of you being at your best mentally is very low. So you really want to reduce your size when that situation arises, and take time off. If you're going to trade small until you feel like you have your bearings back. And if you traded for a bit, you know what I mean, where you just feel mentally off.
Yeah, absolutely. I've certainly been there, certainly from the emotional side. Have you seen fluctuations in just in the market that for your system, you'll get a whole bunch of winners in a row, and then typically it starts to be choppy, and then you'll have the losers in a row, and then it just kind of has that ebb and flow?
Absolutely. You can see it in my monthly returns where I'll have, a few big months and then losing months. And in the past, it would be, like plus 40% for the month, minus 20% for the month, plus 30% for the month. These massive, massive swings. And last year, the breakthrough was I'd have a big, I'd have a plus 27, plus 25, then minus 2, minus 2, minus 2, minus 5, plus 30, minus 2, versus, plus 30, minus 15, minus 10, minus 10, minus 10, I really, that was the game changer, was reducing size in these losing periods. Because when you're losing,
how quickly did you reduce?
Would I cut size?
Yeah. How quickly do you reduce?
Very, very, very quickly. I mean, 3 or 4 losers in a row. It's like, am I doing something wrong? Am I taking bad trades, or is the market turning hostile? Right? Because you really have to use the market as a feedback mechanism. If you're trading, if you're not winning, is it, have I suddenly forgotten how to trade? I've been doing this for 7 years, right? Or is the market just hostile to my strategy?
Yeah. And so I love what you said about with Richard Moglen. You talked about you were trading this one time, and you were trading your A game, doing really well. Then your B game kind of kicked in, C game, and basically when you hit your C game, you kind of say, enough is enough. But I've seen it where, it sounds like the three of us do very similar things when we stack together a bunch of losers, let's say, and losing trades, and to basically reevaluate, to pull back, to throttle back. And we probably have it written into our game plan or our trading plan to do that. Because sometimes I'll go to the place, if after reducing side, I'm still hammering the losing trades, I'll go back and start simulated trading or back testing. Say, okay, is something screwed up in my process and all that kind of stuff, and then jump back in. Which leads me to the question I was going to ask is, at what, Mike asked, at what point do you switch over to that, and over to that mode? Have you taken a look at, because it sounds like you've corrected the issue where your bigger monthlies are doing well. You've reduced the size of your losers on your losing months. Have you taken a look at what I call micro seasonality?
I'm going to write this down. What is micro seasonality?
Well, if you look at a chart of seasonality on the NASDAQ, you look at 20 years worth of season data, and it follows a pattern on monthlies. Basically, certain months are up, certain months are down. But if you've included 20 years worth of data, and so those trends seasonality trends seem to stick, or have a tendency to stick throughout the year. And so when I get to micro seasonality, I'm taking a look at, based on my past performance and also the seasonality of the index that I'm perhaps trading, like the Qs or TQQ, are there certain times of year where there's a larger tendency for it to be a losing time? And so that's why I look a little bit under the hood and get into that micro seasonality of, let's see, over the last 10 years, my Februaries have always been weak performers. Why? And I'll get in and dig into that a little bit. And I find the link oftentimes links back to, it's just, I want to go one way, but the market is saying, Dennis, nope, we're not going that way. Not this time of year.
That's
What?
fascinating. So you obviously have a lot more years of experience than I do trading and a lot more
Yeah.
data. So it's funny you say that because I used to think the seasonality stuff was ridiculous. Like what does it matter whether it's April or August? But now actually after having traded more, I haven't looked into it, but I could see that happening more. But mainly more so because now I believe that humans, when we trade in financial markets, I think we're herd animals. And I think it's almost like, like the aurochs go south during February and then they come back north and it's like, I think it's the same thing. So I actually do think that's a thing. So that's something.
Yeah.
I don't have enough data. My results in the past were so erratic. I don't think my results are enough of a a solid enough data point because my trading was too erratic with my sizing. But now going forward, I hope I'm a consistently profitable trader going forward. I think the data would be more relevant, if that makes sense.
Yeah. So because some of the stocks are like snowbirds. They go south in the winter. There's an analogy there, guys. Come on. No. Anyway, so Christian, looking ahead, how do you think trading will evolve over the next 5 years with the advent of more crypto and this type of stuff? If you were starting out today, double question, what's the one thing you'd focus on to even faster than what you did?
Okay. I'm writing those questions down. Okay. How will trading change? The markets change, but they stay the same. I saw this stat which says that 90% of speculators, there's 90% of them turnover every 5 years. Okay.
Wow.
But but if you go back and study history, you study the market leaders of the 1950s, 60s, 70s, 80s, the patterns are the same. Why? Because it's human beings making them. Human beings trading out of their emotions, because most people aren't trading a system. They're not trading with rules. They're just trading their feelings. And, human beings haven't changed. We're the same. We were 100, 500, 1,000, 5,000 years ago. The emotions are the same. And, I've gotten the opportunity to speak to a lot of traders, and it's amazing when I speak with them how much fear is the primary factor in the decisions they make. It is a very, very powerful emotion. Very powerful. And that is what is influencing most of the price action. And that's why, even though it's different people trading, the patterns remain the same. So I don't think the market will change. It's just humans trading it. If someone else starts trading it, if Martians start trading on markets, maybe the patterns will change. But as long as it's humans trading it, they're going to stay the same.
So we don't have to worry about the AI bots?
I don't think so. I mean, I spoke with some traders at the gala that do mechanical systems,
right?
And it's like, oh, it's a 60% return with a 18% drawdown every year. I'm like, well, that sounds incredible. He's like, what are you talking about? What I want what you do, Yeah. But I mean, everyone loves it. I mean, I personally love the idea of a bot where you just press the button and it just does this thing, right? You just sit back and collect the money, right? But the bot guys are like, no, I want more, but they can't. The mechanical systems don't work like that. You need discretion. You need a human to make the decisions to get the really big returns. I think. Right on.
I encourage everybody to go into Bill and Neil's book, How to Trade Stocks, and there's a chart in there from 1889 of Tennessee iron, and I would say take a snapshot of that and hang it on your wall, or hang it, put it in your journal somewhere, because it describes shows exactly what you described, the human nature of people who drive, who influence the price of everything. So the second part of the question was, if you were starting out today, what's the one thing you'd focus on to improve faster?
That's a great question, because I like to think I was doing everything I could to learn as fast as I could. The one thing I would change, I was on Twitter pretty early. The amount of content on Twitter is incredible, or X now. It's just the quality of traders, the people who are there. I mean, it's just incredible, and so much of the content is free. So I would have been more aggressive with that, I think. What would I have changed to learn?
What do you mean you would be more aggressive with X? Just engaging?
Engaging, I think.
Okay.
Asking questions, reaching out, because the traders on X, a lot of them, they're there to help people. If you have a question, you should ask. Like for me, people send me questions and I answer them. Because I was you 7 years ago, 6 years ago, 5 years ago, 4 years, 3 years ago, 2 years ago. Like that was me. I was still struggling. I was still trying to learn. So, and the content that people put out on X, it was just so incredibly helpful. Like you're not alone. There's a lot of people that are trying to make this work, and it's really, really, really hard. So that's one thing. What do I change a little faster? I mean, I wish I had found Kwalamagi faster. I mean, he's Christian Kwalamagi. He's incredible. I mean, to be fair, I did find him in 2019. So I guess they found him pretty early, but it's just, I wish there was a way to do it faster. I really do. I was doing this full time for 7 years. It took me 7 years. I wish there was a faster way. Maybe some guys can get it faster. It's really hard. I mean, I wasn't losing. I was winning, but not much. I was a boom and bust trader. I'd have a big year and then I'd give it all back in the next 2 years. And I have a big year, then I'd give it all back. It's just, you have to go through the market cycle several times to figure it out. It really experience. There's really no shortcut, unfortunately. You can read all the books you want. You can study all the charts you want, but until you go through the emotional swings and experience it, there's really no shortcut, sadly.
Right on. So, Mike, what you got?
Well, would you recommend people do demo trading or trading with a smaller account size to try to get those to help build the emotional muscle? And at what point would you say that people should or could start to scale up? How would they know that they're ready?
I would say demo trading is a waste of time. I wouldn't bother demo trading. You got to start with money, because the hard part of trading, if you're just following the instructions on the page, you just press the button. That's easy. It's when the money is on the line, can you follow the rules? If there's nothing, it's like playing poker for play money, right? People ask me, if I want to learn poker, should I play for play money? I'm like, well, when I play poker for play money, I just go all in every hand because it's meaningless. It doesn't mean anything. I think there has to be some. You need the money, so there's that emotional attachment to help you understand what the game is about. It's about controlling your emotions and controlling yourself and executing your plan and strategy in the face of the emotional turbulence you will feel. I remember playing poker with my wife for play money, and she was just goofing around, right? I mean, this was years ago before we were married, and then we added money, $5, okay, insignificant amount of money, but now her hands start shaking, right? When she's holding when she's betting, it's like she's just feeling all this emotion. The money is just because for her $5, that was a meaningful amount. So I would put enough in your account where it means something. It doesn't have to be a lot of money, but just enough where you feel it. Okay, because that's the hard part of the game. If there was no money involved, it wouldn't really be that difficult. It's the money and our emotional attachment to it that makes the game difficult.
Yeah, cool.
Totally agree.
So, well, guys, thank you so much. We are basically have reached and went over our. So, Christian, we've breached and gone over the hour, but which we normally like to keep it down to an hour, but that's okay because this is very valuable stuff. And so, Christian, I have my kind of like other question for you is, well, one, do you have any questions of Mike and I?
Oh wow. Well, I mean, I do, but it would probably be another hour of conversation if we went.
Well, I can provide short answers. I don't know about Mike. No.
Okay.
No. What would be some of the questions you would ask Mike?
So Dennis, how long have you been trading?
Who, me?
Yes.
Let's see. I wired up my first internet modem in 1991.
Wow.
And so yeah, I used to dial up. We didn't even have charting. You had to subscribe to charting programs at that time, and you could download like 30 or 40 different stocks, 5 years worth of data, and they charge you a monthly fee. But yeah, and it would take like a half hour to an hour to download all that data. But then once you started updating, it wasn't so bad. But yeah, that's when I started. And,
Okay.
and
Flashbacks of this Hewlett Packard that I used to have. Well, with the big cathode ray tube and the floppy disk.
yeah. Well, my original computer was basically one. I went to grad school, and when I got out of grad school, the Navy sent us back here to over here to Hawaii, and I was trading with an old 386 machine that you couldn't even go down and buy an IBM computer. You had to go down. Well, you could go down and buy an IBM computer, but as students, we would go down to a computer store and they would build you one. And so I had a built computer, and so that's what came home with us. And then and so I can still remember. I think you mentioned in your talk with Richard Moglen that you basically remember the dial-ups. I don't know if it was your dad's or something, but yeah, it was go wing, bing, 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 bing.
Yep. AOL 2.0. I remember. So Dennis, I mean, a follow-up question. So did you know of O'Neill from the start? Did you read How to Make Money in Stocks right when you began trading?
Oh gosh, no. I was actually, what attracted me to trading was a report called the Fabian Report. Fabian Report was a guy who basically did swing trading with mutual funds. And I fell in love with this concept. I fell in love with the charts, and I'm going, oh man! And I'm an engineer. Okay, after I stopped flying, I just went and became a civil engineer, and so the technical side just absolutely drew me in, and I just went, wow. But it wasn't until probably 1990. No, about 2000 is when I first, no, oh gosh. It was 1995, 1996 is when I first read, Bill's first book, and then became a facilitator for the IBD meetup in San Jose, California, called the Bay Area Moneymakers.
So you participated in the internet bull market. I mean, you were there trading those stocks back in the day.
Oh yeah, I mean it was crazy. I mean, because you'd sit there and go, I mean, it looked like this chart of CRNC, but that was like every day,
right?
And so you talk about making mistakes, and I think partly I started off seriously thinking that here I was, really well-educated guy, naval officer, had done a lot of great things in my life and all kind of stuff, and was kind of patting myself on the back, kind of proud. And as I've shared, Mike knows this story, learning how to trade emotionally was harder than the emotional stress of learning how to fly off a carrier.
Wow.
And because of so much beliefs and hindering beliefs that I brought along with me. Mm-hmm. And so also being an engineer, engineers have this terrible fault. They kind of, they put themselves on an ivory tower, kind of like, I'm really brilliant, I'm really smart and all that kind of stuff. And they always tend, not always, but many tend to come to the avenue of trader of, I will, whatever system I get, I'm going to make it better. I will reinvent the wheel and all that kind of stuff, which basically just blows them out of the water. I've had so many engineer friends say, oh, well, hey, I invented this system. It's going to do all this stuff for you. And what I find is I adopted what I call, I follow a very clear and simple approach to basically making profits. And so what I approached was, hey, let's make it simple. And I found that there were multiple swing trading systems that were out there. And so I went to work research and I said, okay, let's cherry pick. Let's pick the best pieces out of each one of these and leave the junk behind. And so from IBD, what I chose was I hate doing fundamental analysis. So IBD provides my fundamental analysis. And then and so I take a little bit as we reinvent ourselves and put that together. And I feel like I wanted to, again, harvest the low-hanging fruit to build the system to make it really simple so that people who work for a living, because I was working at the time, 10 to 15 hours a day, 7 days a week as an engineer, because I was by that time I'd retired from the Navy, and I was building towers for the mobile phone companies, and I was busy all the time. And so when I developed my system, it was with the idea of I'm going to make it where people can basically not have to be in the market during the day. They can invest in this using conditional orders and do it on Saturday and Sunday. And then you do a fire and forget and on your orders and just let them go. So I'm sorry. I'm sorry for the verbose response.
No, that's great. That's the short answer too.
That is the short answer. Yeah.
So you traded also through the great bear market of 2000 and 2002.
Yes.
So what was that experience like? Because I've been through bear markets, but nothing quite like that.
It was it was really wonky, and at that time I didn't understand the technical patterns enough to realize that the signs were there that we were topping and we're going to fail, and my rules were not sophisticated. My simplistic rules were not sophisticated enough, or my understanding of the simple rules was not sophisticated enough to recognize, okay, we're getting into trouble here. Fortunately, and that's one of the areas where we blew up, and then that helped me learn. So when the 2007, 2008 thing happened, okay, we've been here before, and so this is going to provide a huge buying opportunity, which it did. And so now I love bull market. I love bear markets. Yeah. Because a bear market, if it comes around every, let's say, 3 to 4 years, is going to provide a person long term, is going to provide a person the keys to wealth if they can manage their fear.
100%. Yeah.
So anyway.
That's great.
Anything else? And let me share what got Mike and I together. We met online at not a dating app. No. We met online, I think on what was it, Instagram, Mike, or something, and we just started talking. I saw his bio, and he'd been a facilitator or an organizer for the New York IBD meetup, and I was the organizer for the San Jose IBD meetup, and so we just started chatting back and forth, and gosh, Mike, I think I was like 6 or 7. It was 5, 6 years ago, I think.
Yeah, it was a long time ago when you swiped right, and there I was.
Yeah, and
Alberto Tinder. Time flies.
And what was really cool is what I love. We both brought a passion about trading. Mike brought this huge amount of just knowledge and wisdom about the psychology of trading. Therefore, his book, the Trader Mind Wheel, and I was always the mechanical guy. I was like what Tom Sosnoff refers to as a mechanical trader. I trade a mechanical system, yeah. And then we've joined together and collaborated, and then we came together and say, hey, let's put on this podcast. But we've been on each other's, we've appeared on each other's podcasts, but then I've invited him to do, presentations for the Bay Area Moneymakers. But we just have a really great relationship. I kind of look at him as he's about the same age as my sons. And he's got, his daughter is about the same age as my grandkids. And so that's that's how we kind of got together, and I just love bouncing ideas off of him, and I love guiding Mike when it comes to using ChatGPT.
Oh, that's great. Oh, and Oh, thanks for answering my questions, Dennis. That's great. I mean, one more. Do you have charts from? So I'm a little OCD about this. I have a Evernote with charts. Do you have charts from like stocks, big winners from the 90s, especially that tech bull market, that are no longer listed? Like the stock, like etoys.com, companies that went under. Do you have charts that are I can no longer find, but that you might have saved that you could send to me?
The answer is no, I don't. And I mean, I had, when we moved back to Hawaii from California, we moved back here. We basically, unfortunately, got rid of a lot of stuff because I had some old IBD training sessions from some of their chart books and all that kind of stuff. So unfortunately, not. But I think I would suggest, you can still find it, is I would suggest going and getting the dialing up and Googling the Enron charts.
Mm-hmm.
Enron charts with what went on with Enron back many, many years ago, I think is very, very, is just, one of those classic type of failure charts. Basically it fell from the sky like a turd from a tall cow. And
that chart. Yeah. Actually, they put up a chart of that at the Minervini Gala, and as soon as they put it up, they didn't put it with the name, but I was like, "That's Enron." Like I just knew it was Enron.
Oh, yeah.
I don't look at it so much.
And what's so rich about it is just and the other reason I don't do that is I carry. Hold on a second. Is this book? I don't know if you can see it or not.
Yeah.
Okay. I think is I call this the Bible of Technical Analysis by Edwards McGee. This is the 9th edition, which I think is the best edition. But this has some great examples of market failures that I basically have studied, because I did all my study, all my work and education to actually go for my CMT.
Oh wow!
But I was I was at that point in life where I didn't need any more initials behind my name. So
okay,
So anyway.
Thanks, Dennis. Oh, and Michael. Oh
just
wow!
Inspire me to
There
pull
you
down
go.
this
Whoa.
from this trade here. This is from the front. This is from 2012 Tractor Supply Co. So I would print out the charts and I would type up some of my notes and scotch tape them onto the chart.
Wow.
And so this was one of my first journals from way back when.
Wow.
When I first started to get serious about trading.
Yeah. Wow.
That's Mike. Yeah, Mike Webster, right?
Yes, I know of him. I've never met him.
Okay. Yeah, Webby basically just has. He occasionally shares some of his.
Whenever he shares something, I immediately screen copy and paste it in my.
Yeah, it's amazing stuff. So okay.
Yeah, he does.
Anyway, well, hey Mike.
I have questions for Michael, of course.
Go ahead.
So Michael, sure. I read your book. That story of you overcoming, your childhood and those beliefs was incredible. Most people can't do that. Most people never do that. What was it that enabled you, or how were you able to do that? Because most people get stuck. They just can't. They cannot change their beliefs.
Right here.
I see. So faith in a higher power. Belief in God.
Grace of God. It truly, in many forms, in many different ways throughout my life. Even when I went to Tony Robbins, Unleash the Power Within. I don't recall if I mentioned this story in the book or not, but even being led through that, I could see Christ working through him into me and being able to change the story. So one of the big things that happened at Unleash the Power Within, did I tell the story in the book? I don't think that I did. But at Unleash the Power Within, one of the things that I needed to get over was that I didn't feel that I was worthy of love. And the reason why was because I had told this story to myself that, my mom had, she passed away. She passed away from cancer. And I hadn't seen her for 10 years. And I found out that she had passed away from cancer 2 years after the fact. And I wrote to to her to try to rekindle our relationship and everything, and found out that yeah, she had died, and that she had she actually didn't want me to or she didn't want my stepfather to invite me to the funeral, because she's like, oh, they probably wouldn't care. Like that. That's the kind of relationship, unfortunately, that we ended up having. That took a serious toll on me for a very long time. And so in order to get past that, I needed to find a way to change the narrative from me being somebody that's not worthy of love to something else, right? So it's like the way that I tried to convey some of this stuff in the book is that, well, we have all sorts of things that can be these mental weeds. And if we don't weed our mental garden, then it's going to be overtaken by weeds. So what do? We've got to find a way to pull the weed from the root, and then not only do that, but to put something good in its spot.
Yeah.
And so Tony has this whole process of removing this mental weed. And I think I told this part in the book too, of this Dickens process. The Dickens process, where you basically, like, the Charles Dickens story, right? Well, with the Christmas Carol, visited by the three ghosts. So basically, you have to make whatever this belief is that you're holding on to. Well, identify it first. Identify the weed. In this case, me not being worthy of love, and all the things that are attached to that. Then saying, well, what happens if I continue to hold on to this belief 6 months from now? Where am I going to be? And not only where am I going to be, but what kind of impact will that have to those around me?
Right on.
Then fast forward a year, 5 years, 10 years, and you do this mental exercise. But it's not just that. It's also one of the things that Tony demonstrated before we even did that exercise was that we have the ability to make ourselves feel any emotion at any given time. And he did exercise, right? So like you could, like if somebody's sitting next to you and starts bursting into laughter, like that'll eventually be infectious. You'll start laughing. Then you could also make yourself extremely upset, and all sorts of things. So for this particular exercise, he said told us to put ourselves in a state, right? So this place being a absolutely miserable state, and then start having all those kinds of think about the 6 months, 1 year, 5 years, 10 years of just holding on to this belief and what's going to happen to you, what's going to happen to your family, what's going to happen to things that you care about. And so very intense thing. But at the end of that, it's just like holding on to this belief becomes so unbearable that, okay, you have to let it go. And then you're able to like slingshot yourself forward and past it. And then once you're past it, then it's like, okay, now we're in a place where we can begin to change the story that we're telling ourselves. And so we want to put a story that's empowering.
Yeah.
And that's how we could start to move past some of that stuff.
Oh, that's incredible. Thank you, Michael.
And
Wow.
and let me interject just real quick, is that Mike is a man of faith, and so am I. We both have very strong faiths, and that was the other thing that when our relationship was growing, and that was a piece that we both appreciated and respected about each other. And so part of the goal of our podcast here is not just to reach thousands of people for trading, but Mike came up with a goal, I think, going into 2025 or 2024, is that we want to use this podcast to reach 100,000 people with the concepts of our faith. And that's the rest of the story. And so we went, when we have our little brainstorming sessions, we kind of always end it basically with a God bless and sometimes a prayer and all that kind of stuff. But right, Mike?
Oh, sure. Wouldn't be here without him. So thank you.
That's right. So anyway, all right. Any more Christian? Any more questions?
No, I think I've kept you guys long enough, but thank you for answering my questions, and thanks for inviting me onto the show. It was wonderful.
So how about this? So where can people find more information about you and your work? And because you're doing so much great stuff and helping so many people.
Oh, thank you. Twitter. I mean, X is the place that I'm on. I'm on it all the time. My wife's always like, "Oh, you spend too much time talking to people." But I'm there. If you have a question, you can reach out, and I'll do my best to answer it.
Okay. And I just dropped your address and your Twitter address in the in the chat. And so, hey guys, we will post this up to YouTube, and also Mike gets it posted up to Spotify. I want to thank Christian for being here, and just want to say, hey, we wish you our blessings, and I look forward to being able to discuss with you even more cool stuff in the future. And so if you are joining us for the first time, remember, go over to Spotify and not just watch us, guys, leave some comments. Don't be a ghost supporter, and the other thing is share it with another trader who may need the help like we provided today. So I will say aloha and God bless Mike and Christian.
Great. Thanks. God bless. Yep.
Thanks, guys.
God bless.